Good afternoon, everyone, and welcome to Growth at Any Cost, Line of Business, Insights from TBR Software Vendor Benchmark, in which our senior analyst will walk you through the results of TBR Software Vendor Reports and Software Business Benchmark, providing you with additional insight on the state of the market. My name is Allison Crawford, and I'll be your host for today's webinar. In a maturing enterprise software market, agility remains a critical component of driving revenue growth. A second important component is the ability to stay ahead of customers' invariable desire to consume software through cloud delivery by meeting portfolio needs and outpacing competitive sales threats. Vendors take on various roles to win across lines of business, including product provider and solution seller, consultant, and trusted advisor. Over the next hour, senior analyst Elizabeth Hedstrom Henlin and analyst Andrew Smith will share their opinions on why these changes are picking up speed and what they'll mean for your business in the upcoming quarters. Before I pass this over to Elizabeth, there are a few housekeeping items I'd like to cover. First, we're recording today's session and we'll be posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Elizabeth and Andrew will address them at the end of the presentation. Or if you'd like to set up a client inquiry for private discussion, please reach out to any one of us at the end of the presentation to send up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Many of you already know our senior analyst covering enterprise software, Elizabeth Hedstrom Henlin. Since joining TBR from EMC over 3 years ago, Elizabeth has been working closely with the largest software vendors to understand their business models and strategies. Andrew Smith joined us from Forrester, where he covered digital business trends and innovation, and is now managing our infrastructure management research track. They will be joined in the Q&A by Principal Analyst Jeff Wallicott. Their expertise and perspective has helped numerous software clients on their marketing messaging, product positioning, and corporate strategy. And with that, let me hand this over to Elizabeth.
Thanks, Allison, and I'm pleased to see some familiar friends on the attendee list already. We're going to have some fun as we always do. I'm pleased to introduce Andrew to you, and Jeff in what will soon be a new role for him, as he will be taking over for me at the end of the week, leading our software practice research and discussions going forward. It's been a blast to spend some time with you all, and you're in excellent hands rolling into November and the balance of the calendar year. So, where are we in the market? Current state, we're going to take a snapshot of the benchmark that published a couple of weeks ago to give you our point-in-time view, and then, as always, our best practices look going forward. Here's the takeaway. The clock is running for a lot of the established vendors in this market. We're seeing a lot of vendors really moving towards how to best capitalize on what limited spend is out there, and as you've heard in our last 2 webinars, we're really going to take a look at this from an applications perspective, from a technology perspective, which is the database operating system middleware grouping of the market, and then the systems management perspective going forward. And I have a secret surprise for all of you on the line. We've got a preview of upcoming research that's hiding at the end of the agenda, so you're going to get a sneak preview of what's next for TBR software practice and what's next for all of you as our clients. So with that, jumping into the market. Not a whole lot has changed in terms of where players have been between our last discussion a couple of weeks ago and this, but here's the message for you. When you look at the revenue and profitability of enterprise software, it is still a story of install-based defense and maintenance revenue growth driving margin strength and margin profitability. And that clock, as I just said, is running. The rising traction of pure play disruptors, the rising traction and ongoing traction of cloud players in this space demonstrates that buyers are getting a lot savvier than they've ever been. There may be more available now for spend than there was not all that long ago, but it's still less than it was a couple of years ago. So how do you capitalize on what more is available to you? You make sure you're aiming right at your core customers' biggest pain points. And I'll tell you, the fact that Salesforce.com is starting to behave like a traditional enterprise and is still managing to drive the growth and traction that it is, the fact that Tableau is taking a significant amount of mind and wallet share in a market that is really very much maturing. And when you look at the chasing folks in the improving category, you see single segment players like Symantec with its recent divestiture, which Andrew, not divestiture rather, but business split, which Andrew can talk about, and I think in a little bit more detail as we get closer to the end of the story. Checkpoint, Trend Micro, Totus, Adobe, everybody's starting to really turn these very targeted narratives around because they're aiming where their customers need them most. Moving from install-based defense to growth dictates you've got to be seen as at the front of the pack. You've got to make it to the first round of consideration, and we'll go into how some of the larger players in the space are doing that and what you can learn from it in a little while. So when we're looking at corporate year-to-year gains, I think the big takeaway for us is that license revenue is continuing to lag other segments, and it's how do the license leaders take mind share away from the subscription leaders that they really get a lot of traction going forward. So I think you're seeing the industry-specific story from folks like SAP, IBM, Oracle, the business intelligence story from Tableau, OpenText, and for OpenText in particular, it's how you tie in to that. And then for Tableau, it's a case of the business intelligence, the data visualization narrative, really making some significant headway for them in a market that is otherwise very much stable. So taking another look at the professional services venue, software-related professional services, the migration to the cloud is continuing to jumpstart some otherwise very established players, Microsoft again being a very big driver of that. How do you keep the customers you have? You make sure that they're not having to bring in a systems integrator to deal with complexity that the cloud and broader enterprise-wide deployments of BI are bringing on. So from here, we're going to take a quick detour into the balance of 2014 outlook and where we see the market going in 2015. And at this point, I'll invite Andrew to kind of join me on a little bit of point and counterpoint in terms of what we see from the application side of the market, which is really my core area of expertise, along with where we share sort of looks at the database. And then from Andrew's perspective, looking at a lot of the real systems management players that IM side of the house. So to give you our key takeaways for the market for the balance of this year and into next, it's an interesting blend of business value and technology expertise. Our customer research is really showing us that it's about telling a story that engages not only the IT buyer, who is still going to be held accountable for implementation that does not disrupt the business, but business value, and this goes to the industry applications narrative, the business intelligence narrative. The line of business buyer, the market has told us, is very much in play as someone who has control over the decision, not sole control, but equal control, and someone who has budget at stake. So they want to know that this is not going to be seismically impacting what they have to get done, because as you all know, your customers are telling you, they're telling us, time to value has to increase. In a world where enterprise software is becoming ever more digestible via mobile devices, through cloud delivery, on converged systems, what your customers are buying has to be rapid and non-disruptive, or it's not going to get bought because they'll go to someone else that can at a lower price. We just touched on the industry-specific workloads, embedding analytics, putting that industry-led application together, tying it to the cloud where you can, is aiming at bringing that mission-critical data more tightly into the bottom line for the customer's business. It's, again, an install-based defense story, but it's one that is most resonant right now. And then finally, agility and flexibility that look at how the lens from on-premise to cloud becomes that point of view where it becomes that seamless end-to-end perspective for your IT manager, and that's where the systems management players are the ones that are really making headway. So with that, I will hand it to Andrew for his perspective on LOV and IT.
Thanks, Elizabeth. So digging a little bit more into the software technology side of the story, one of the most important overarching themes that we've seen this quarter is really about how BI functionality is becoming kind of the differentiator for those business applications and the databases they leverage. And that is trickling down and affecting kind of how vendors are winning that line of business buyer decision and influencing their clients in a different way. So I would, IBM and DB2 are kind of top of mind just because IBM released earlier this week. And you can see that the story is starting to transition. It's no longer just about, the applications and the operating systems that DB2 leverages or enables. It's about, how these databases can be used to enable capabilities like data ingest, data mining, and warehousing, and text analytics. That kind of BI aspect, bringing that to the top of the conversation is very important because it brings that greater business value to the line of business leaders who are increasingly making these decisions. And you hear the statement more and more that data is now the most important aspect of any business, and it might be kind of cliche, but it's true. Data is a bigger and bigger piece of the puzzle. So on top of the security and in-memory conversation that we see happening, especially on the software technology side, the leading providers like IBM, they're taking things a step further, and they're promoting the development of a comprehensive application ecosystem that, it leverages everything from the database and DB2 Blue to Pure Data and SPSS, all tied together with things like Watson Foundations for real-time and cognitive analytics. So it's really stitching together those different threads into a comprehensive story that you can easily forward to your clients and really hammer home the importance of the solution you'd be delivering. So like I said, this type of comprehensive solutioning it's really changing the conversation at the line of business level because vendors can deliver more industry-specific technology for data and analytics workloads, and that's what we're seeing the leaders, especially in our benchmarks, start to transition and prioritize. They're making the shift by pursuing vertically aligned strategies and more effectively organizing the wide breadth of IP and software technology offerings they possess, all the way from database to cognitive analytics like IBM's doing. So moving on, we've also got coverage of some SAP and Salesforce on the slide, so I'll pass it back to Elizabeth to keep going.
Absolutely, and I think the key takeaway for all of you here, we're telling a technology story, we're telling a data story, and we're talking about business intelligence. This is a key indicator for us that the new appliance, the new virtual appliance is not a hypervisor-led story, but how do you most tightly integrate the application and the mission-critical data, whether it's a database-led narrative or an application-led narrative. One is useless without the other. So taking a look at the two folks we called out on this slide, how does SAP continue to accelerate SAP HANA in a world where database 12c within memory is live? They make that migration simple, easy, and fast, not to pun on their own slogan, but SAP has spent, I think, a significant amount of time in creating a narrative around SAP HANA that moves beyond the product itself to the implementation side of the house. And that is a key tactic for all of you in thinking about talking to these customers that are looking at data. How do you make it easy? How do you make it seamless? Because when we talk to buyers, they're asking for non-disruptive, they're asking for rapid time to value. These buyers are looking for those of you that were on our business intelligence customer research webinar a couple of weeks ago, buyers are looking for returns on these investments inside of 2 years. And that's down from 3 to 5 years a couple of years ago when we did our original study. That impacts not only your BI stories, but your broader database stories, your broader ERP application stories. There is no option to fail any longer in delivering business outcomes and IT results. And as you all heard us say last quarter with Matt Healy on the line, the database wars are back. They're here. And I expect that when you speak with Jeff and Andrew next quarter, there's going to be a significant amount of anecdotal discussion of the thunder with which the Oracle sales force returned to the market around database 12c. Well, it's a problem with a company that pre-announces, not problem in terms of a broken area, but a challenge. When you pre-announce an offering last September and it's only available this past June, people are going to wait to buy it, and Oracle knows how to get around that problem. As you all have heard me say before, I never bet against Oracle throwing sales bodies at a problem until it fixes itself. So why wouldn't customers wait until in-memory was generally available? Our colleagues who were at Open World told us that 12c with in-memory customers were all over the show, and we predicted that last quarter when we talked to all of you. Customer proof points, very, very meaningful success area to accelerate your sales cycle. And for Oracle, this is about taking the in-memory mantle back from SAP. Oracle's had in-memory since 2006, and I think it has to frost Larry Ellison that he lost the market's mind share on that concept. Now, as Andrew and I have talked about off the record, you'll notice that the missing company on this in-memory discussion sheet is IBM. And with IBM, I think, really hanging its hat on Watson and the next wave of growth, I think DB2, and this is Elizabeth's opinion, Andrew and I go back and forth on this. I think that DB2 Blue is the dark horse in this race. It's a proven product from a proven company, and to a degree, I think you're going to see around in-memory the rising tide lifts all boats phenomenon. When Oracle and SAP are spending to sell an in-memory product, Microsoft is sitting in the background with SQL Server 2014, and I think Satya Nadella is looking for another meaningful win there in the on-premise business. Don't count them out. And I think Ginny Romedy is going to start looking at where are my competitors going in a world where, to quote Jeff, she's just had to break Sam Palmisano's promise around the earnings per share results in 2015. Well, she's just had the handcuffs taken off her, so now she can really start thinking about what does she already have that she can sell more effectively. So with that, we'll jump ahead to talking about the industry-specific and the applications-led narrative.
So on the application side of the equation, you know, our benchmark results highlight that there's certainly a pitch battle occurring for wallet share within the market landscape. And a lot of this is a result of the demand for more industry-specific applications and workloads that are causing vendors to change the way they reach customers and having to dig deeper into industry verticals than ever before. And I'll go back to IBM again as an example. The release this quarter of Watson Analytics with a freemium-based pricing model really, you know, foreshadowed one of their software business's major challenges that was brought up during the earnings call earlier this week, which is the fact that they're really pushing to adapt and develop new ways to reach clients through digital means and opening up those digital channels. So, you know, that means anything from freemium and try before you buy base models to online add to cart buying options for your application needs and kind of enabling the infrastructure underneath that, whether it's the development platforms or anything else that goes along with it. So it's really a challenge for vendors to adapt to the changing way their clients want to buy applications and utilize their software and applications. And you know, that we see that trend being more digital and more industry vertical focused. And I think IBM kind of hit the nail on the head in terms of their software business on earnings earlier this week by focusing on that. Elizabeth, do you have anything to add?
Definitely. I think the interesting cross-section on this slide is Salesforce moving into industries as the longtime enterprise leaders are moving into industry clouds. I think it just really emphasizes the cross-section of how software is being consumed regardless of delivery method. Salesforce.com has just become the animal it has always been trying to eat. They are older, they are established, they are enterprise. Regardless of how the software is being sold, they are now SAP, IBM, Oracle, just conceived a different way. I think Workday, which we don't have included here, but who's also aiming at industries, is another point to add here. This is the rebirth of the application. It's software as a service, and for those of you who were on the line with our colleague Jillian Morandi or on the public cloud benchmark, she's my other point and counterpoint on these discussions. But when we talk about how it's being consumed, she and I both agree that the software as a service-led discussion is moving closer and closer to customers' mission-critical offerings. And I think when you see the industry cloud and you see firms like SAP, IBM, and Oracle who have so much at stake in terms of really keeping the financial services customers they have, the real core industry customers, I think the next 6 months are really going to see advances in how do you secure, deliver, and assure mission-critical data in the cloud. And that's going to change how customers can act on that data, use that data, and move ahead going forward. So when there are companies with this much revenue and this much ability to invest, all aiming at the same challenge, I think the application is about to take a huge leap forward. And I think that's a fascinating thing to watch in a market that a lot of people view as mature. So when we take a look at the agility and flexibility discussion, I'll talk for a second before I pass it back to Andrew. The ability to be heterogeneous is something that continues to come up in our buyer research. When customers have $1 to spend and an internal mandate to get $3 of return, a big part of that challenge is reducing complexity. And to a degree, you're going to see some customers on your larger end of ability to spend rethinking how the entire construction establishment of their environments is done, and that's where you can see offerings like SAP HANA, Database 12c, IBM DB2 Blue, or even the idea of data as a service, I think really taking some traction. But that's by no means everyone, especially for those customers in the mid-market. And when we talk to the mid-market, they're really telling us that what they need is the ability to see and understand everything from a single user interface, a single perspective, a single way to really ensure that there is no disruption between on-premise to cloud transformation data discussions. So with that, I'll kick it back to Andrew to take a look at some of the best practices in this area.
Yeah, and before I dig into CA and semantic, I just want to continue Elizabeth's point on the systems management side about software-defined solutions, because I think that software-defined storage, software-defined networking are key points to this area. And I mean, we've seen kind of an explosion, especially among leading vendors like HP, IBM, and Dell, all leaning so heavily on software-defined storage and networking capabilities because of this need to really reduce complexity and be able to serve client needs across heterogeneous environments. The conversation has really elevated beyond just the speeds and feeds of infrastructure and requires vendors to provision that, like Elizabeth said, that kind of single pane of glass orchestration framework necessary to make infrastructure run in a less complex, more seamless way. So it's not just about providing or standing up compute and storage enhancements, especially when you get to systems management. So what I think the major takeaway is that the vendors who are able to provide that orchestration and reduce complexity are going to have a significant advantage moving into 2015 because it's really turning into the conversation is turning into all about meeting customer demands for flexibility and mobility and scalability. And that's why we see vendors like Dell partnering pretty aggressively with providers like Nutanix and Exenta to build out those orchestration capabilities that they couldn't otherwise provide in-house, and really strengthen their software-defined capabilities. But that's not the only piece of the puzzle. Like Elizabeth said, there are some mid-market players who are making some significant moves as well. CA, we saw divest its ArcServe business earlier last quarter, and that the move really underscores the fact that vendors aren't afraid to shed non-critical businesses in order to both promote organic innovation and streamline their own services across on-premise and cloud capabilities to deliver the flexibility that customers are demanding. And Symantec, the developments with Symantec have been, equally as impactful. We've seen them prior to their split. Symantec was already releasing. It released its new managed security service, as a service first before the on-premise version, because they're feeling the heat from customers who are demanding that scalability and flexibility even in security offerings. And with Symantec's split, I really think that the security side of the house is going to be able to gain some agility and time to market in really pursuing these kind of more customer-oriented security as a service products, I guess you would say, that their customers are demanding, and that they need to be a key to remain a key player in the in the advanced threat protection market, and handle customers' changing demands.
And I think jumping on the idea of the splitting of companies, I have to give kudos to HP on the timing of their split as well. I think when we go back to the story we kicked off this discussion with, it's growth at any cost. It's how do you get more agile, outpace the competition, and I think that HP's willingness to really shake its corporate foundations and do so quickly. I mean, I'm sure internally for all of you HP, it was nothing short of, time-consuming and long, but the willingness to just break the business in half, let people focus on what they do best, and create a more agile whole is a continuation of a lot of moves we've been seeing all around the industry across the last year. How do you outpace your competition? How do you take customers from them? And how do you think about where your next disruption is coming from? You have to be willing to rethink your own business and your own execution. So I have to applaud HP on that move, and I think it's going to pay dividends for them by the middle of next year in terms of growth. So with that, I think we're going to kick over to projections. So I'll sort of start from my end of the world and let Andrew chime in with his point of view, and then we'll invite Jeff to join us from here as well in terms of what he sees as the top of mind challenge and opportunity in 2015. So for me, taking a look at how do not only leaders in this market, but those folks looking to make up ground, take advantage of new opportunities brought on by challenges, and I'll call our friends at Symantec out as one of those folks. It's not only about keeping the lead that you have, it's about being willing to rip yourself down to the studs and rethink how you do business to come out of what I think Stuart Williams, our VP of Research, has called on some of these webinars, the long, dark night of the soul. And this is how you do it. You take your portfolio roadmaps, you take your go-to-market strategies, and you rethink what your customers need and want, because it is not 2005 any longer. It's not even 2010. Your customers are under threat. Your customers need to drive growth, and your customers are facing, in many cases, the same margin pressures as all of you. So when you take a look at your portfolios that talk about cloud delivery, that think about mobile access, and rethink how you tell a story that not only engages IT as it always has, but empowers them to position to the line of business as not a cost center, but an ally in driving business growth, that's where you become top of mind on the Rolodex. That's where you get yourself at the top of the pre-select list, and into consideration in a way you've never been before, because you are the trusted advisor. Cloud isn't going anywhere. I'm sorry for those of you I see from our large applications vendors on the phone. I'm sorry, Salesforce.com isn't going anywhere either. The cloud is here to stay, and I know a lot of you have made the changes, at least a lot of the changes that you're going to make to deal with that challenge now. But continue to rethink how you integrate your business to tell that hybrid story. And I think Allison will have an update for you all in a couple of weeks with the next round of the webinar schedules on our next hybrid cloud research from Alan Kranz, our cloud practice manager, and Jillian Morandi. And that's where I think I'll leave you all with a preview of coming attractions is how do you tell the hybrid story, because that's how you keep those cloud players out of your space. Andrew, what would you add to this?
The only thing, I think you hit it pretty well. The only thing that I would add is, as a major point to this, to route to market and success, is to hammer home the sales and channel partner strategy. Especially this quarter, we saw from Dell Software and from Symantec, a lot of their strategy for success relied on their partner channel. Dell spent a ton of time and money promoting their software sales channel capabilities, really spending the time to both educate and train partners, offering them incentives to find new ways to integrate the various software capabilities Dell has with their strong infrastructure background and build it into those new areas, especially among security. So that's something that that can't be said enough, that the partner strategy is an essential part of this. And Symantec, we saw the same thing. Even before the split, Symantec was meticulous about making sure that their both internal sales and partners were aligned to the new segments that they wanted to sell to, because I think that's really going to help kind of slingshot them into the new targeted markets that they're going after. So having that foundation is extremely important for future revenue growth and kind of achieving those top line results even faster.
Thanks, Andrew. And I think I'll throw in a little quick plug around my thoughts on the security industry before I pass it over to Jeff. I think there's one aspect of the systems management side of things that we didn't touch on a ton in this round of the benchmark, though Andrew called out some moves that Symantec has made. But I think as we look at the 2015 projections, and Jane Wright, who is our senior analyst around security, is putting together, as we speak, our new security vendor benchmark. I think the key takeaway from me looking at the enterprise software landscape is, again, that on to off-premise narrative. Those vendors that are thinking about security from an integrated perspective, from an end-to-end whole, I think are really going to be positioned to take some mind share and some advantage in probably the middle of next year. And with that, Jeff, any thoughts you have on 2015?
Yeah, I've got way more thoughts than I can try to net out quickly here. To plug myself, I have a webinar tomorrow at 1 talking about the history of the IT landscape and how it has. We are in a transition cycle like we've never seen before in the industry, in my opinion. And the key things here, as Elizabeth touched on security, if you try to figure what are the key pieces moving forward that are emerging, analytics, and what analytics does is the game changer in everything that's going on. It quickens it shortens the competitive advantage you get with any new innovation or IP that you develop. What it's doing to the velocity of our industry is mind-numbing and mind-boggling. It's fascinating. So the two things you need are IP output. How quickly can you mine the data you have to get competitive advantage? And number two, how are you going to secure it? And we know that security and the way in which you secure is under transformation as well, because you have to secure the cloud. It's why most of the VC money is in security startups, because the way in which you secure it is different. I can't tell you how. I have a liberal arts degree in economics and government, but it is a big piece of this thing.
Part of why we get along so well.
Exactly. I have to trust others to understand the technological underpinnings. But those two things are at the core of what's knocking this industry on its bringing it to its knees in a lot of ways. And where you're going to see that is in the routes to market. The forecasts there are for 50 to 60% consolidation down there. It's a personal area of pain for me. I had to file Chapter 7 on a business. I know it's not a pretty thing to do. And there's a lot of that that's going to go on. So sales and channel strategies to present a compelling narrative for law buyers, there's a lot said in that circle. And there's a lot going on there. So yeah, projections for 2015 are, you know, hang on to your hats. It's going to get a little turbulent.
Yeah, that's it. I think that's the perfect way to send us over to questions. And before I hand it back to Allison, I'm going to just show you all the. You've gotten used to the way in which we approach a market from the bottom up, from the financial perspective, to really go into what it means for the business of IT. I wanted to show you all just a graphical breakdown of the taxonomy we've been talking to with all of you across this benchmark, really for the last 12 months explicitly, but before that, the level of expertise that we've brought to bear in the company and understanding the companies inside it. As of 3Q14, so you can expect to see this cross your inboxes in probably the next 2 months, so I believe it comes your way in early December, the software vendor benchmark will become 2 products. The application software vendor benchmark, which will take a deeper look at business applications and business intelligence, and the infrastructure management software vendor benchmark. And by the way, I apologize, these names are a mouthful, but here's what you need to know. We're going to approach these market segments with the same rigor with which we have always approached enterprise software. We're going to take what we've been giving to you so far and go a little bit deeper to make it less of to make it not only a fruit basket that you find interesting, but a stack of apples and a stack of oranges that can be more accurate, that can be even more tightly applied to your business results and outcomes. And you'll have this in your files when the slides come your way, but these are the vendors that are currently slated to be included in the application software vendor benchmark. You'll notice a lot of the same players that we have been talking about today. And then in the infrastructure management software vendor benchmark. So the metrics that you've gotten to know from us are the same. They're going a little bit deeper on these market segments, and they're going to continue to give you the same level of look between license revenue growth, which will include subscription revenues appropriate, maintenance revenue growth, and software-related professional services. So with that, Allison, I'll hand it back to you.
Great. So thanks to those of you who have sent questions through already. If anyone else out there has questions they want to send through, please do so now. So guys, the first question we have is, as these vendors see a monetization shift to an as-a-service revenue, what do you think it means in terms of the support line?
So that's a question we've been really batting around internally here for quite a while, and I think the big takeaway for us is that as you've seen vendors like Oracle and SAP start thinking about how do you cash maintenance revenue into subscription growth, the software support business also is on a finite life cycle. Now, I'll tell you that based on what Andrew and I keep seeing in terms of CA Technology's ability to gain maintenance revenue off of a mainframe, I don't think that software maintenance is dead anytime soon. I do think that it behooves vendors in this space to think how they take control of their own destiny, as SAP and Oracle have, and set a path to migration rather than have that migration done to them. And Jeff, anything you want to add?
Yeah, if I could add, I think what Oracle and SAP have done is they've formalized what I consider the obvious or the necessary, which is if you have a large end customer who is, say, locked into an on-premise install and you know they're going to head to the cloud, if you hold serve and say, well, you know, you got a 3-year deal, you're just going to build up the animosity with them, so you got to let them off the leash early and let them go. Because right now, with what is going on and the change in the data fabric and how we monetize, incumbency is at an all-time low in terms of its value. Because I've read a book called Thinking Fast, Thinking Slow, and we're in a thinking slow period right now. So if they're looking at the transformation to get out over to the cloud, they may look at it and go, well, with all the work that's going on with that, we might as well consider alternative vendors at this point in time and take the bath while the water's warm. So the power of the incumbency is at its weakest. And that conversion of the cash cow of software maintenance may have to be let go of to let them migrate faster. That seems to be one of the things we're underestimating in the industry, is the rate at which this transformation is starting to accelerate.
Anybody else? Andrew? No? Okay. So the next question we have, it came through everyone. Cloud migration assessment and porting of legacy applications is not as easy as it's suggested. What are the services implications around that?
No one ever suggested it was easy, and that's part of, I think that's part of the challenge, especially for multi-line vendors in this space. How do you figure out the best practices and then share those with your ecosystem? And I think and this is when I say how glad I am that I share an office area with my professional services colleagues, because I think that one of the fascinating areas of disruption there is the services firms acquiring software IP. So I think that rethinking how a product is developed from day one, learning from, and I'm talking specifically to the multi-line or on and off-premise vendors, learning from the cloud pure plays in terms of how you create a roadmap that is 100% transparent for your customers with updates multiple times a year. That's where you really start to think, I think that's where you really start to rethink your product from the ground up, and that's where you start to minimize the ability for the disruption to be significant and the services impact to be that much more sizable.
All right, we have one more question, so if there's any other questions, please do send them to at this time. Last question right now, guys, is app dev is under a lot of pressure from public cloud vendors building out their own tools portfolio. What do you think the impact is going to be for such firms like CA?
So I'll start from the sort of broader platform point of view, and then I'll pass it to Andrew for his thoughts on the vendors in his space. I think the challenge around app dev, especially platform as a service-led growth, and again, I'm taking a little bit of cloth here from our cloud colleagues, but where it affects the vendors I look at is as follows. Your cloud developers are the same vendors that were building on Linux, the same developers that were building apps on Windows. It's a very experienced constituency that knows what they want, knows how to get it, and is very willing to shop around because there's nothing to lock them into a particular platform. So I think the challenge for the traditional vendors as you deliver the application development platform is how are you seen as innovative instead of just your granddaddy's, developer language. And I will say this, I think, as those of you on the phone have heard me say, I never bet against Oracle, but I think Oracle's challenge in this space is Java is as ubiquitous as air and is difficult to monetize. So how do you take it from being the establishment to being innovative? And I think that's where Larry Ellison's move from CEO over to CTO. Once the database as a service offering is resolved, I would bet that Java as a service is his next target of challenge, and I think that's a big benefit for them. He is the face of their innovation, and when push comes to shove, he knows more about the portfolio than anybody except for maybe Thomas Kurian, and Thomas only knows as much. So that's where you start to really rethink Java, and again, a rising tide lifts all boats. Andrew, when you look at the folks that have to then manage those apps, what do you think the challenge, where would you see this going?
Well, I would just add to your points that I think the open source trends and the benefits of open source are not to be underestimated as far as the impact to app dev and especially to DevOps, and whether it's Dell embracing OpenStack and using and leveraging Red Hat, or HP making investments in Hortonworks for Apache Hadoop. Open source is a great way to kind of alleviate some of that pressure on your DevOps and attract app dev interest in your platform, so that you can kind of manage for success. Basically, I mean, there's no, like Elizabeth said, the developers are going to be able to kind of pick and choose the applications that their business needs to meet, their demands for flexibility. So it's all about kind of being accommodating and trying to attract as much influence as you can. And I really think that the open source alliances and capabilities are going to be critical.
So we don't have any other questions in queue, so with that I'm going to switch to wrap up. So I want to thank the analysts for their time today, and thanks for everyone for joining us, particularly as this was Elizabeth's last public curtain call for TBR, so she will be missed as she moves on to new ventures in her career. So as we sign off, we are, as Elizabeth mentioned, shifting over to Jeff Wallacott, who's taking over as the lead analyst in our software practice. So I encourage you to follow him as well as Andrew here at the Twitter handles listed, as well as TBR, our corporate handle listed at TBR Inc. And you can find all of our recent research as well as media mentions and the like on those Twitter handles, as well as joining our social media conversations on SlideShare, YouTube, and LinkedIn listed here. So I do encourage everyone to join those communities. On your way out of the webinar, I'm sure many of you guys have heard me say this many, many times. Quick survey, 3 questions: how valuable was the presentation, how good were the presenters, and if there's anything that we are missing in these presentations that you want to hear more about. We do realize that you are busy professionals and want to make sure that we're covering all the points that you want to hear about in the time that you do spend with us. So any feedback is looked at and incorporated into presentations quarter to quarter. I'm going to leave the chat function open for a couple minutes in case there's any last-minute questions or anyone wants to say goodbye to Elizabeth before she leaves us. And if not, as she said, we'll be doing this presentation again next quarter with Andrew and Jeff Wallacott. So thanks, everyone, for your time, and we look forward to seeing you again next quarter.